I'm Matt Bishar with NAREITWeek here in New York City for REITweek 2016, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Ben Butcher, the CEO of STAG Industrial. Ben, thanks so much for joining us.
Thank you for having me.
Now, can you start by talking a little bit about the company's capital recycling program and where you expect it to wind up at the end of the year in terms of acquisitions and dispositions?
As you know, we're an active acquirer and we'll continue to be a net acquirer this year. We had a small strategy change at the beginning of the year in that we decided that we would do some asset recycling on assets that are sort of fungible assets, a part of our regular part of our portfolio, but to provide capital for continued acquisitions as well as to demonstrate the value creation that we have in our portfolio aggregations. We're going to sell at least one small portfolio, probably in the order of $60 to $80 million.
And last year, the company announced that it was starting to look at some more joint venture deals. Is that strategy still on the table, or have you changed course a little bit?
We had our stock dip down to sort of $15, $16 a share. At that time, we were looking at alternative sources of equity capital to continue our acquisition program. We have a platform that is capable of deploying equity capital into industrial real estate. We and a lot of counterparties were interested in accessing that platform. So joint venture was an alternative that we looked at when we didn't like our common equity price. It's really something that doesn't, I think, make sense for us or our shareholders when our stock is priced appropriately.
And you've described the company's portfolio as a virtual industrial park. Can you elaborate on what you mean by that, and how does that set STAG apart from its other industrial REIT peers?
Trademark, you're not allowed to say that. Now, I don't think it necessarily makes us different than our industrial peers, but we have an industrial park. If you think about it, institutions over time like to buy things that they view are very risk-free, and industrial parks have always been one of the assets that a life company or something like that would seek out to acquire. Fortress malls, industrial parks, etc. We suggest our portfolio and the portfolio of our industrial peers are virtual industrial parks. They have the additional diversity of geography, as well as they act like sort of a multi-tenant industrial building or office building, but they also have the additional diversity of geography. So not a differentiation from our peers.
Great. Ben, thanks so much for joining us.
Thank you.
For more from REITweek 2016, be sure to visit REIT.com.